When are bond rates going to go back to normal? This is a question I've gotten. I've heard this in the news. Today we're going to be talking about what normal means for bond rates. We're going to talk about where they are today, where they've been in the past, and implications for long-term investors moving forward. Okay, let's get started. So where are bond rates today? So when we're talking about bond rates, we're talking about long-term government bond rates. So 10 and 20-year bonds. What rate is the government willing to give us for us to tie up our money for that extended period of time? Right now, it's around 4.5%. Okay, and for context, what does that mean? Is that high? Is that low? So at 4.5% today, many people were used to, over the last 10, 15 years, rates being dramatically lower. And so that 4+% interest rate is driving other things higher, like mortgages. And sometimes it's driving other decisions of ours. And so, so rates seem high relative to where they've been over the last 15 years. But what happens when we zoom out a little bit? So this chart here goes back 150 years, all the way back to 1870. And it shows the long-term government bond rates going back from 1870 to today. Now, this blue bar that's going across, this is giving us our normal range of returns for long-term government bond rates. And when we look at normal inside of that band, it's between 3 and 6% interest. Now, as you can see, there were time periods in the early 1900s that it was lower, then it went dramatically higher in the 70s and 80s, and there was a period where it reached its lowest recently, just over the last 4 or 5 years, back in 2020. And so when we look at the average being that 3 to 6%, and as we discussed, today's interest rates, now it's the middle of 2024, today's long-term government bonds rates are around 4.5%. We are right in the middle of that average between 3 and 6%. And so we say, when are bond rates going to return to normal? Well, they're about as normal as they have ever been over the last 150 years. Now, here's what we can say is we know they're not going to stay normal because rates go up and rates go down. But in terms of where we are right now, they're very normal. 4.5% is a common rate. So if you were making a long-term decision or looking at a decision thinking, well, rates need to come back down to where they usually are, right? Well, we're looking at the last 15 years as we can see that below the blue bar area where we had unprecedentedly low interest rates. And that meant something for the economy. It meant something for investors. And today, we're about normal. And you may have different decisions. But when you're looking at this, zoom out and say, I want to make sure I'm not making any decisions around rates thinking that they're going to come back down to the historically low rate, when in reality, they're kind of right in the middle of where they typically are. And so as long-term investors, when we're looking at stocks, when we're looking at bonds, sometimes it's helpful to go past recent history and look at the bigger picture. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.